So you see a stock that's been absolutely crushed for months. And then, boom, it explodes. What do? Is this the start of an epic comeback? Or is it just a trap waiting to spring on investors? That's exactly what we're digging into today with ATPC. We're going to break down all the technical signals to see what's really going on here.
And here's the number that's got everybody buzzing. 56% in one single day. I mean, a move like that doesn't just happen, right? It immediately makes you ask a pretty big question. So what are we looking at here? Is this just a classic dead cat bounce, or are we actually seeing the first real signs of life after a truly brutal collapse? That's what we're going to unpack. We're going to look at this thing from every possible technical angle.
All right, so to really get why this 56% jump is such a big deal, you got to understand the context. And let me tell you, just before this massive move, this stock was in a very, very dark place.
Just think about that for a second. The stock was literally trading pennies away from its lowest point of the entire year. I mean, it was basically left for dead. When you know that, a 56% surge from those depths is, well, it's incredibly dramatic. And that brings us to the bull case.
Okay, so what's the argument for this being a real rebound? Well, the bulls are pointing to some pretty classic technical signals that suggest, the tide might finally be turning. And the first thing they're looking at, it all starts with the volume.
And just look at the sheer scale here. We're not talking about some small bump in interest. No way. The trading volume went from 54 million shares to over 500 million. That is a nearly 10-fold increase. In the world of technical analysis, they always say volume confirms the price move. And folks, this is about as loud a confirmation as you are ever going to get.
And it's not just the volume either. You've got a whole suite of momentum indicators that are all flashing green. For starters, the MACD. That's the one that tracks trend strength. It just flipped to a buy signal. Then you've got the RSI, which is climbing out of that oversold territory. It's kind of like a spring uncoiling. And to top it all off, the money flow index is at a wild 92.63, which basically means a fire hose of cash is just pouring into this stock right now.
What's really crucial here is that this rally isn't just random noise. The price is actually powered through several key short-term hurdles. You can think of the 5, 10, and 20-day moving averages as these defensive lines that the bears were holding, and, well, the bulls just smashed right through all of them.
And here's the final piece of the puzzle for the bull case. The price just broke above the middle Bollinger Band. Now, for those of you who track this stuff, you know that's a big deal. It often signals a shift from a really quiet, low-energy state to a high-energy one. It suggests this move has some real power behind it, and yeah, it could be the start of a much bigger trend. But, of course, that's only half the story, isn't it?
Because for every bull, there's always a bear, right? And the bears have some really compelling reasons to be cautious here. Their whole argument is that, look, one good day, it doesn't just erase months and months of damage. The bigger picture, they say, is still pretty grim. And this slide just perfectly illustrates their main point. So yeah, the price is above its 5-day average. That's great. But take a look at the 200-day average. That's a key indicator for the long-term trend. It's sitting way up there at $1.28. The stock is still down over 90% from that level. When you zoom out, one little spike is just a blip on the radar in a much, much larger downtrend.
Here's another big one for the bears, the parabolic SAR. Now, all you really need to know about this indicator is that when the little dots are above the price, the trend is considered down. And right now, those dots are way up at 0.941. That means the main long-term trend pressure is still pushing this stock firmly downwards.
Now, this is where it gets really interesting. One of the bullish signals actually comes with its own little warning sign attached. The Stochk RSI, it's an indicator that kind of measures momentum within momentum, has hit 100. And while that sounds amazing, it often means the stock is overbought in the super short term and might be due for a pause or even a pullback. It's a sign that the buying frenzy might be getting a little exhausted.
So what do we have? We've got this powerful short-term surge that's fighting tooth and nail against a brutal long-term downtrend. How in the world do you make sense of all these conflicting signals? Well, let's take a look at the final verdict from the analysis. And here it is, laid out side by side. It's pretty clear, right? In one corner, you've got these explosive short-term signals, the massive volume, the MACD crossover. And in the other corner, you've got the grim long-term picture. The price is still miles below that 200-day average. It is a genuine technical tug-of-war. So, the report's conclusion isn't just a simple buy or sell. It actually captures this conflict perfectly. It says, yes, this is an aggressive rebound with massive volume. But, and this is a big but, it's happening from an oversold bottom. In other words, it's a huge recovery, but it's starting from a very, very weak position.
Okay, so where does all this leave us? Let's get down to the most practical part of all this, the key price levels to watch. These are the numbers that are really going to tell us who's winning this fight. Think of this as your battlefield map. For the bulls to stay in control, the price absolutely has to stay above that support level at 9.4 cents. That's their line in the sand. The next big test is the pivot point at 12 cents. If they can break through that, it could mean this rally has more gas in the tank. But everyone should be watching that resistance at 13.5 cents. That could be the first major ceiling that stops this thing in its tracks.
So in the end, the chart is telling two completely different stories at the exact same time. You've got the story of a spectacular, short-term rebirth fighting against the story of a devastating, long-term collapse. And the biggest question of all is simply this: which story is going to win?